All right, hello, welcome everybody. Welcome to Talkin Investing. You're here with Tom and George on a historic week. This is probably the most we've ever had to talk about, so a huge amount of stuff to go through. Two back-to-back historic days. George, how you doing?
I'm a tank, Tom. I'm a tank. I ain't nervous, ain't scared, nothing. It's just part of it. It's part of the game.
Part of the deal. This was a big one. This was one of the biggest ones ever. The last 2 days to put together are historic. So we'll talk about a bunch of that. Across the markets, we're seeing things we've never seen before. People are scared, confused. Having said that, I'm going to talk about why I think Bitcoin was the best thing to have this week. And I think there's some solid evidence that we're starting to see a bottoming out process also in the Bitcoin miners. And for those of you who have said you've heard this before, you've heard this before. So, we've been fooled many, many times. But I'm going to look at some stuff that shows you, especially today, you were better off being in Bitcoin miners than almost anywhere else in the stock market. So it's all relative. Still doesn't mean it was a good day. All right, let's do this. If you guys could please hit the thumbs up, smash the like button. We're at 14 likes.
Time to get a poll, Tom.
Time to get a poll going. We need to help us out in real time. Smash the like button. It makes a big difference on the live stream. And if you're here watching this later and you're not live, you can smash the like button as well. It still helps. So thank you all for joining. Let's get a poll. And I'm going to ask the most obvious question possible. I'm not going to start out with Bitcoin. So first question, was this the bottom for the stock market, for the equities? And I'm going to show you back-to-back day. The S&P 500 had its so there's a lot of different ways to measure this. So, take it with a grain of salt. But just by the amount of points the S&P went down, it had its second and third worst day in history back-to-back yesterday and today. So this was not a normal down day. And then to have a catastrophic, maybe that's too big of a word, to have a horrific, historic down day yesterday, and to follow it up with today, I'm not sure where we ended. It might have been worse. Today might have been worse than yesterday. We'll double check that. In any event, it was in the same neighborhood, down 4, 5, 6%, depending on what index you're looking at, back-to-back days in a row. I mean, in 2 days, these things put themselves in correction area, and we're going to talk about, are we in a correction? Are we in a bear market? Are we in a market crash? Or is this the bottom? Because we are at a flex point right here, and people are freaking out. I'm going to show you a fear and greed number that I almost fell out of my chair when I saw this number. It's the second worst fear and greed number in the history of the index. I couldn't even believe it. So this is what I'm saying. We have a bunch of Bitcoin miners put out their monthly operational reports. So far, 5 of them are out. All 5 of them had very good production in March. So March has 10.7% more days than February. So that would be the baseline. They got to go up 10.7 just to be the same. But all 5 have beaten that. And once again, I'm just going to say it right out of the box, Bitfarms, that everybody loves to hate, this is the second month in a row they're running away with the best monthly operational report as far as the amount that they produced. So we'll look at that schedule as well, and we'll look at all the 5 companies that put their operational reports out. And there was some other big news from Bitfarms. There was some other big news from Marathon. There was some other big news from Hut. and iron. So a lot of additional press releases this week on top of just the monthly operational reports. So massive week. 26 likes. If you're here, if you would be so kind, if you could hit the like button, it really does help the stream in real time. And we're going for 100. We've gotten 100 likes every single time. We're only at 26 right now. So do us a favor. George, what's happening? I don't know if George is on a call, maybe. George, if you're not on a call, let me know because we cannot hear you right now. He's on a phone call, so we will get back to George. Minor Deacon said, markets don't bottom on Friday. Sour Melon Gaming. Talkin investor. Red. Trash. And this is from Sour Melon Gaming, not me. Is Bitfarms trash? Question mark. All caps, yes. So I know there's Bitfarms, it's the worst performer. We're going to look. I also put a new chart together, which was from this cycle's high for each Bitcoin miner. So that was a different date. And some of them were 6 or 8 months apart. But somewhere between December of 2023 and January of 2025, all of these companies really had a big run up. And they are all way off of that. We're in almost, it almost looks like, when we get to that chart, it almost looks like a crypto winter for the Bitcoin miners. And Bitfarms is in last place from the cycle top over a year ago until now. Bitfarms, I'll tell you, they're down at last place. They're down 80%. That's not from the 2021 highs. That's from this cycle.
Oh, sorry, Tom, I'm back.
That's okay. I figured we determined you were on a call. Welcome back.
Gentleman flooded his basement, so.
Sour Melon Gaming. Tom, I got mad respect for you. I don't, however, have any respect for Ben Gagnon, who is the CEO of Bitfarms. Listen, here's the deal. They have changed strategies. I'm not going to argue with anybody. And if you don't like their new strategy, and I'm pretty conflicted on it. There's 3 companies now, maybe 4, that have made pretty fundamental shifts in their strategy. Bitfarms is probably the biggest change. And so, I'll show you a press release relating to that. But Bitfarms went from 6 months ago, they were telling us they were targeting 35 exahash by the end of 2025. The last press release they just put out basically said they don't have plans to grow for the next year and a half. So they're at 19 and a half. So, they do have an order for some machines that are going to come in. That may add 2 or 3 exahash, but you're going to be looking at a company that's at 22 to 24 maybe at the end of 2026 versus 35 exahash at the end of 2025. Now, there's a long time between now and then. If things turn around, they might start gearing up again and adding exahash. That's obviously always dependent on all these factors. The biggest factor for them, and what I had said on the Tuesday only live stream, and then sure enough, it happened, I think, Wednesday. I either said it on Friday and it happened Monday, or I said it on Tuesday and it happened Wednesday. Bitfarms cannot dilute their stock anymore. This is a 76-cent stock. They cannot sell any more shares of their stock. So what I talked about is what they really need to have happen is they need to secure financing. I felt they needed to get $200 million in financing. And I'm just going to jump to this because it was, sure enough, the next thing you know, so this was April 2nd. So this was Wednesday, right? So the next day, Bitfarms enters into initial agreement for private debt facility with a division of Mark, this name here that I'll pronounce wrong, group for up to $300 million to fund initial HPC project development at Panther Creek. This is the stuff that they got from their Stronghold merger. So here they go. They did get their hands. The first tranche of this is $50 million. Initial draw at close of $50 million, with up to $300 million available upon entry into definitive project loan documents. So this is what they needed, right? People were asking, is this company going out of business? Are they done for? And just from a financial balance sheet standpoint, I never felt like they were in any trouble. You know, their auditors did not give them a going concern, meaning the auditors did not feel like there was any danger they were going to go out of business in the next 12 months. And the auditors are pretty conservative about that. If they think there's a shot, they're going to say it to cover their own CYA. So, but there's a big difference between not going out of business and thriving. So, you know, there's a lot of distance in the middle of those two things. And I think this was a gigantic piece of the puzzle of what they needed to get where they're going. Without this, I just didn't see how they were going to get where they were going. And, you know, sure enough, it literally happened the next day. So obviously this has been in the works for some time. That doesn't happen overnight. But, you know, they knew it was fairly obvious. This was their last choice. There were no other options left. But if you look at their monthly operational report, 19.5 exahash under management, 19 watts per terahash, so very efficient. And more importantly, 213 last month Bitcoin mined in February, and that jumped up to 280. That was over a 30% increase month over month. And again, there was, 10% of that's because there's more days in March than February. But the other part of that is the merger that they went through, the acquisition of all the Stronghold stuff. And they are getting more machines online. So I know that this stock is about as down as out as you can get. And we'll talk more about it later. I'll leave it at this for now. But I have not given up on Bitfarms, but what I will say is everybody should understand there's been a fundamental shift from a company that said they were getting to 35 exahash, which at the time they were telling us that was very competitive to keep them a top 5 Bitcoin miner. They're not targeting being a top 5 Bitcoin miner right now. They have had to pivot in a major way. And they may say, they may put it that they wanted to pivot. I feel they had to pivot into more high performance computing and really slow down their pace at growth. But having said that, they do maximize their efficiency. They got 280 Bitcoin mined. That's going to be like 5th or 6th place out of all the Bitcoin miners this month. The problem is over the next year or year and a half, there's 3 or 4 or 5 companies that, unless they change their plans, are going to pass Bitfarms. So jumping off of Bitfarms, I obsess over that. It's by far not even my biggest position anymore, just because it's down 80% from its highs. So, but I'm holding on, and I have been buying options. I did buy the dip, and one of the things that I bought was some January 2026 $1 Bitfarms options for like 22 cents. So I just, can they get to $1.22 is my break even by, the middle to end of January 2026. I feel confident about that. Oh boy, Gorilla says Bitfarm gives me Enron vibes. I will tell you, Bitfarms, I believe they're audited by PricewaterhouseCoopers. I'll have to double check that. PwC, and so, that's one of the big 4. Anybody can get it wrong, I guess. It was one of the big companies that got Enron wrong. I'm not worried about that aspect of it. I'm just worried about the fact that their stock is so beaten down right now that they cannot raise capital. And in fact, most of these Bitcoin miners right now do not want to, even if they have an ATM, and Marathon just opened a $2 billion ATM. We'll talk more about that. That was big news. So they opened it. They're under a $4 billion company now, and they did a $2 billion at the market offering. So there is a bunch more dilution coming from Marathon. However, they were green today. Now, they didn't announce that today. They were very red the day they announced that, but everybody was red that day. I think they plan on buying a lot more Bitcoin. You know, they're coming up on 50,000 Bitcoin, and the stated purpose, as always, is for general use, basically whatever they want, and the purchase of Bitcoin. So I think they're going to continue to. Marathon's the biggest company already by exahash by far. I think they're going to continue that growth pattern and continue to buy Bitcoin, especially at these lower prices. So that's the next press release I expect to see from Marathon is we bought some Bitcoin. This is the bottom for the stock market today. 34% said yes. 66% said no. So
yeah, I don't think it is.
Yeah, I don't think it is either. Are we going to get one day in the middle that's really green after two of the worst days in the history of the stock market? I'm sure we're going to get some kind of little bounce in the middle, a little bit of a relief or recovery, but I don't think we've bottomed out. And we are officially, I want to go to...
Are we in a bear market, Tom?
Well, it depends which one you look at. So this is the Russell 2000. So you can see this information line. I didn't even go to the low on today. I went to where we closed. So from the high in November of 2024, so what, 5-6 months ago, the Russell's down 26%. That is deep into bear market territory. So the Russell is and has been in bear market territory. The question is there still a crash ahead of us? Are we at the bottom, right? Are we going to stay in bear market territory, or are we going to have a V-shaped recovery that I keep hearing a lot of people talk about? The problem is, even if we do, and I'm one of those people, I think we're going to have a V-shaped recovery. I just don't think it's done going down yet, which is why I did some modest dollar cost averaging in, because I do think there will be more opportunities. And you can't, as tempting as it was with these catastrophe days, people are tempted to do one of two things on these days: sell and run for the hills because they just can't take it anymore, or like depending on your mindset, these look like the best buying opportunities, I've seen in a long time. And it was across the entire, my watch list of non-Bitcoin mining stocks, my top 15 on that were down at an average of 15% just yesterday in one day. So, the market's getting killed right now. So this is the Russell. Let's keep going. SPX and SPY is the same thing. So this is the S&P 500. So you can see this is down 17.5%. So, I mean, the rule of thumb is 10% is a correction. Those can be pretty frequent. 20% is a bear market, and 30% or more is usually considered a market crash. So, here we are at 17.5% on the S&P 500. That is the broadest way to measure the stock market, and we're inching towards a bear market. But if you go to, this one should be, let's just switch to Qs. So these are the Qs. This is the NASDAQ. Look where the NASDAQ is. Down almost 22% from the middle of February. So that in a month and a half, the NASDAQ has pulled back 22%. The NASDAQ, as of today, is in a bear market. And is it the bottom? 2/3 of you right now are saying no, it is not the bottom yet. So this market is getting beat up, but I'm going to show you for the first time in a long time, we're going to read an article and we'll go to it because something very different happened in this pullback. So let's go to that. So we've got one index in a correction on its way to a bear market. We've got two already in a bear market. So I would expect the S&P 500 to make its way down to 20% or more. George, you had said a while ago you thought there was going to be a 30% pullback. Well, you know, we're getting there.
Well, people don't ever believe me. How about Tesla?
Should we look at Tesla?
I think this is healthy personally.
There's a different. I probably a lot of people agree with that, but that doesn't mean they like it, right? It can be absolutely brutal to try and live through. I mean, people are clearly in a panic. I'm going to show you a number that I just floored me. We'll do that next. But Tesla down 10% today. Tesla had a bad day. It was down 7 or 8% yesterday. Another 10%. This is what I'm saying. Like, it's not just your small cap, micro cap stocks. This is a nightmare 2 days for Tesla.
Do you think, how is Apple and the Big Seven doing?
Apple got beat up. We'll go to Apple.
My question is, do you think that these will recover? That's the better question.
Apple was $225 2 days ago, and it's $188 right now, down 7% today, and it had a similar day yesterday. You know, it's lost more than $500 million. Sorry, $500 billion in market cap. $500 billion in 2 days. That's bigger than any company used to be. They lost that in 2 days. So it's from top to bottom. Now, let's see how Microsoft did today. Microsoft did the best out of all of these yesterday. They hold up today, down 3.5%, and they were down 2% yesterday. So they held up a little bit better, but you know, they're they're still almost about $2.7 trillion. But Microsoft and Apple haven't been under $3 trillion in a long time, and they're both well under that now. How about NVIDIA? That was the other $3 trillion company. They are now, wow. So they got hit another 7% today. Yesterday was similar. So if you look at the 5-day.
So Tom, why do you think this happens this way? Let's just talk politics for a second. That, you know, there's a Republican in office versus a Democrat in office, and every time it seems like there's a Republican in office, the stock market goes to poo-poo.
I will not. There's a really super specific reason that this is happening. It's a panic. It's a crisis. It's also an opportunity for big money to steal money. I shouldn't say steal, but to take it from little money, retail investors, right? That is what's happening right now. And we have uncertainty. This tariff thing is it's the 800-pound gorilla. It's a monster. It is dominating. Everything else does not matter in the stock market. Right now, it is only tariffs. So we had Thursday was a reaction. Wednesday after the market closed, Trump did his speech and introduced his tariffs, and they were hefty. He still tried to show a chart that, you know, we're going to do half of what is being done to us, is what the chart showed. But regardless of that, it was a giant hike in tariffs for, you know, most of the countries around the world, and with a floor, a minimum, I think, of 10% no matter what. So that was introduced, and with that, the market lost their minds and crashed on Thursday. So let me see if I can find.
Yeah, 22, almost a 30% decline too.
So I got one article from CNN and one from Fox, because when these two guys are saying the same thing, you know that something happened. This is CNN. China imposes 34% reciprocal tariffs on imports of U.S. goods in retaliation for Trump's trade war. So on Trump's chart, he showed a 34% tariff for China. That's on top of the two 10% tariffs he's already put in. So that's 54%. So China has responded in kind with a gigantic tariff. They're also going to curtail some of the stuff that they ship to us, rare earth materials, that kind of stuff. I think it talks about that in this.
Well, and that's all stuff that we have that we're just not allowed to get here because of the EPA.
Well, a lot of it is that we have a lot more, right? We have 10,000 regulations for every one that China has. That's not a real statistic, so don't bother to look it up. It's a hyperbole, but it's probably not as far off as I think. So China imposes 34% tariffs, and then over on Fox, you've got China retaliates with 34% tariffs on U.S. imports. So, this is not fake news. This is both sides of the aisle. This is just what happened. So that happened this morning. So Thursday, you get a meltdown because the U.S. does tariffs. Friday, you get an equal meltdown in the stock market because China, and they are by far the second largest economy in the world, they respond with the 34% tariffs. So, everybody's sitting here looking at this and saying, oh no, the trade war is on. And, how long is this going to last? How bad is it going to get? Who's the one that always loses in these things? The consumer. And that's the mindset. I think this is going to go down a little bit faster and a little bit differently than people are thinking. But there is no doubt this inserted, uncertainty. What are the three words? Fear, uncertainty, and doubt. Those three things tend to tank the stock market. Well, there's a maximum amount of uncertainty right now. When the United States basically just told every country in the world, we are going to renegotiate our trade deal with you. I will tell you, I work with a company that does business with Canada, and the impact on Canada is very small. There was already a trade agreement, so this company's a cabinet company. Cabinets are not affected. There's zero tariffs. So this company's been trying to communicate with its customers for months on this tariff thing, thinking, we were going to hit a big, giant thing. But for Canada will not be tariffed at all on the cabinets that they ship to the United States. But that's just one item.
Yeah, well, let me tell you something. With Diamond airplanes, it goes up like 35% or something like that on the parts.
Yeah, right. There's other things that are going to get crushed. There's no doubt. These were targeted things, right? The United States the new administration has talked about the fact that, we used to make all the steel. Now we don't make any of the steel. So there's certain industries they want to get back to manufacturing in the United States, right? We have what we call the Rust Belt here in the United States, which is an area that's just been decimated by the mass exodus of manufacturing over a 40-year period. And this is looking, I think, more than trying to collect the tariffs, this is an attempt to try to get a lot of this manufacturing back to the United States. So I think this is a negotiation, right? Everything's a negotiation, but the uncertainty part of it is it's not one negotiation. He just opened up negotiations with every country in the world. So, everybody's scratching their head, and we don't know exactly where this goes or where it's going to land. You can bet it's not going to end where it started, right? That's how negotiations work. So this was the beginning, and we're going to go through a process, and it could be ugly. I mean, the first 2 days, the market lost its mind in these first 2 days. You don't see 5 and 6% moves on indexes. That is, you would expect that a black swan type of event happened, and I would in no way, shape, or form consider this. It's a major event. This is not to understate what's going on.
Makes you wonder if a black swan event happens, what's going to happen to the market.
Right.
You know what I mean? Do you think it's because there's a lot of people getting ready to retire and they got scared and they took their money out, retail? Or what do you think?
I think that the retail investors, more so than any, are the first to panic. And they're the last ones to know what's going on, and they're the first ones to panic. So, I'm sure there's a lot of awfully big, smart hedge funds that were doing just what they say, hedging against this, and they were short the market going into this. And they made billions or hundreds of billions of dollars in a 2-day period. And while the retail investor who's just, trying to, especially, here's what I would tell people. If you're under 60, just don't look at your retirement plan, because you're so many years away from grabbing it. Even at 60, you're still probably, some people, you can in the United States, I think you can start grabbing it at 62 and a half or something like that. But most people wait until they're 65 or 70. So, for most people, just don't look at it, because it's going to be bad news. We know the indexes just got destroyed back-to-back days. Your portfolio is not doing well. Your retirement type portfolios. Now, for those of you who are day-to-day managing and day trading and you got the better of this, congratulations. I'm sure a lot of people did that. But for most of us, I'm a buy and hold investor. So this is just, these 2 days. But I look at them, for me, I look at them the reverse way. Now, it's if you have zero money left in dry powder, if you have nothing left on the sidelines, and I'm not criticizing you if you do, because number one, it's hard to save any money in this world right now with the inflation we've had over the last several years. Everybody's stretched pretty thin. And number two, this is about the 100th buying opportunity that we've had in the last 2 years. So at some point, you run out of dry powder on the sideline. So if that's the case, it's really hard to just watch. You just got to grin and bear these days. If you do have some cash.
Oh, you're telling me.
Right. If you do have some cash on the sideline, allocate a little bit. But I wouldn't go all in either, because you don't know. Just like our survey is saying, 2/3 of the people think this isn't the end of the downturn. So, it's that dollar cost average mentality. If you're dollar cost averaging, ultimately that is a successful strategy. But, at any given moment, like right now, for instance, when we're in the middle of anywhere from a 17 to 27% pullback, depending on which index you're looking at, it's a nightmare. Andrew saying retail investors bought 4.7 billion of stocks on yesterday, the largest level over the past decade. That from JP Morgan. So good for them. That is great to see retail buying the dip. And then only to find out today it dipped just as much again as it did yesterday. Christian saying buying opportunity for what? I mean, if you're dollar cost averaging in, almost every single stock on all of my watch lists were down either double digits both days yesterday and today, or if you combine the 2 days, down double digits. So, anywhere from 10 to, I had some over the course of 2 days down 30%. Some of these are brand name stocks. Now, in the middle of the day today, Nike turned around. That's not even a company I have no commitment to Nike, but they're all right. They pulled back. And they flipped in the middle of today. I think they ended up green today, but they just got absolutely, they were down like 20% yesterday or something like that. And big companies, AMD is a company that if you look at their financial statements and if you look at their quarterly earnings report and listen to what they're forecasting, AMD looks like a company that is going to be on fire for the next 2 years. And they are at historic lows and they got destroyed yesterday. Let's see what happened today. And in the middle, I'm going to get to Barry C., who said, next dip when EU retaliates. Yeah, right. I mean, the European Union, all added up, put together, is a gigantic economy. So, things are a little trickier for the EU. But we can expect, we will hear something from the EU, and there's going to be back and forth. I think the EU is it's easier for China to retaliate, right? There's no other place for them to turn. But the EU is looking, I don't know, they got to be looking and saying, can we shift some of this trade to Russia or China? But are those great alternatives for them? in the long term? It's a complicated question for the EU, but there's no doubt. And country after country is gonna. We're at the, like I said, we're 2 days in. We're at the very beginning of one of the biggest negotiations, financially speaking, in the history of the world. Now, not one of the biggest, the biggest financial negotiation in the history of the world. So it's going to be a bumpy ride. And we've been saying that here for a long time. Now, I did not think it was going to be back-to-back disaster. I mean, look at today. The S&P was down 6% today. That was after it was down like 5 or 6 yesterday. The Dow down 5.5%. The NASDAQ down 5.8, almost 6%. The Russell down 4, but that's because it was down 6.5 yesterday. So I'm going to go to a chart and just show you how ugly this week was. Not the page. So if you look at, and this is what I'm going to say is different about this time around. And then we'll look at an article that somebody put out today. So this is from last Friday to this Friday. If you look at the Russell, silver got destroyed. I don't know why. I don't care. If you're in silver, I'm sorry, but it had a giant run up and it had a big pullback. But for the major indexes, the Russell 2000 was down 10.6% this week. The NASDAQ was down 9.4% this week. The S&P 500 was down 8.4% this week. Those are the three major indexes. A lot of people look at the Dow, but it's only 30 stocks, so it can be misleading. But you look at these, right? The S&P 500 is considered the broadest measure of the market, and it was down 8.5%. I mean, these were a nightmare this week. In that same period of time, you've got Bitcoin was in the green, up. I mean, just barely, but it was up 0.3%. So this is that thing we've been waiting for forever. I kind of called somebody last night and said, I feel like Bitcoin just grew up last night. This is what people have been expecting Bitcoin to act like for a long time, but there's been a really heavy correlation between the market and Bitcoin. When the market gets whacked, Bitcoin gets whacked. Well, you're seeing that correlation with the Bitcoin miners, but really all of the entire cryptocurrency universe, they did much, much, much better than the market. And Bitcoin was literally up in a week that was, kind of one of the worst weeks in the history of the stock market. And Bitcoin was up on the week. So I do think that is very telling. And it's a part of the reason I would argue we're putting in a very strong bottom. Because Bitcoin's already gone down and visited like 76,000. If it didn't even revisit those lows on back-to-back 2 of the worst days in the history of the stock market, I think that's extremely strong performance. So, it's not that it went up huge, but you compare it. Now, gold was down. Gold's done nothing but go up in a straight line for the last year and a half. Even gold was down this week. So there was no place to hide. Ethereum down 3.8%. I mean, just everything was red. And most of it looked more like this. And again, a lot of things were down 15% a day, 20% a day. I'm going to go to AMD because, again, I'm not recommending this stock. I'm just showing you what happened. This stock was down 8.5% today. It's down 17% in the last 5 days, and that's really, as you can see, in the last 2 days. 17%. And that was basically from a multi-year low. If we look at the 5-year on this, I mean, you got to go back all the way to, February 2023. That's 2 years ago. So this is a multi-year low. This stock was $211, $227 1 year ago, 1 year and 1 month ago, 13 months ago. This was a $227 stock. It's now an $85 stock. And I really thought, 100, you can see if you look at this, I'll go to the 1 year. It's a little easier to see the year to date. It was really finding strength at $100. and it broke. I mean, it broke over the last, from 2 days ago, from 115 down to that 103, and now down to 85. So, and this is a company, I know they say it shows a big PE ratio here, but if you do a deeper dive, this is a high growth company, and I think they have good things ahead for them. So that's my opinion, not financial advice.
Andrew made a very good, interesting point, and that is this: Nike employs around 500 million people in Vietnam, and they make their shoe for $7 and sell it for $100 to $200. So at 46% tariff, Nike's cost would go up to $3.50.
Right, which is not a big deal. I don't know if that's the point you were trying to make, Andrew, but you're right.
It doesn't seem like a big deal to me.
There's no reason for Nike to. So Nike won't be a company that moves its factories back to the U.S. potentially, because I mean, you just showed the math right there. It's still, there's no tariff that's going to make it worth it for them. But look at the overreaction. If you look at what happened to.
So here's a question though, Tom. I've heard this statement that Trump has made, and this is what he's saying is we're taking back the power from the government to give it to the people, and he's doing it through tariffs. This is just, I guess, for the United States. What does he mean by that?
So ask that again. Sorry.
So he's saying that he's taking the power back for the American people, meaning that the rich people have been getting rich, and that he feels that raising these tariffs is a way to get money.
Well, I mean, here's the concept. Here is his concept, and you can agree with it or you can disagree with it, and only time is going to tell if this plays out the way that he hopes. But what's happening is that two things are happening. Number one, revenue will be collected from these tariffs, but I personally don't really think that's even the big piece of the puzzle. I think, unlike Nike's equation, there are a lot of companies, some of which have already committed, like Taiwanese Semiconductor has committed $100 billion to building factories in the United States.
Is that all because of the tariffs?
So, right, yes, in anticipation, they did that out ahead of this, knowing that, I mean, Trump's been broadcasting this for quite some time. So April 2nd's been the day. He called it whatever the heck he called it.
Liberation Day.
Liberation Day. So I think the theory is to it's literally bringing dollars. If you build the factories, that's money spent in the United States economy. And those factories need to be filled with U.S. workers. So that's putting people back to work. And so that's, trying to bring money out of other countries into this country to get it to the working class people. That's the concept. Now, I understand it's layers and layers and layers more complicated than that, and there's nuances everywhere, but, from 30,000 feet, that's the concept here of what's going on. Whether it works or it backfires, let's see. Trump wrote the book on negotiating. Let's see how he negotiates. That's going to be the answer to the question right there. I'm going to interrupt myself. If you guys could do us a gigantic favor and hit the thumbs up, like button. We're at 54 likes. We're going for 100. We've gotten to 100 every single time, so please help us get there. It also helps spread the stream in real time. So get some more people here talking about, because a lot is going on. A massive amount is going on in the market right now, in Bitcoin right now, and in the Bitcoin miners right now. So despite the fact that it's two epically, historically bad days, these are historic times that are going on right now. This is unprecedented. Liberating me from my money. American Made said, George, the answer is from foreign governments to American. I mean, Trump ran on America first. So there is no question he is trying to do, things to bring jobs and money back to the United States. That was his platform. That's what he ran on. That's what he was elected on. And that's what he's going to try to do. The only question is right now, obviously, the market is terrified that this tactic is it's so much more than they've ever seen. So this is either going to be a very bold thing that ends up working out great, and it can end up working out well for everybody, or it's going to be a protracted, nightmare. And we're going to be, Goldman Sachs raised their probability of a recession to 60% yesterday. So recession wasn't even on the table 6 months ago. Now Goldman Sachs, the smart guys in the room, if you will, are saying 60% chance of recession. So,
but don't you? I mean, it's funny. I don't know. Were we in a recession already?
Yeah, I mean, we had a recession several years ago in 2022. So, is there going to be another one? And by strict terms, 2 consecutive quarters of negative GDP growth. If we cut a massive amount of government spending and these policies take a while to kick into place, we might get some negative GDP growth. I don't know the answer to that. There could be pain in the short term. In the very short term, we know there's pain. We just had back-to-back record-breaking bad days in the U.S. markets.
How are the rest of the markets doing? Like, I know Hong Kong's big, and I know Japan has a big one, and UK has a big one. How are they doing? Has anybody looked?
Yeah, and it's not good anywhere.
It's not.
Barry C is saying, so Tom, explain what the Fed are going to do now. And secondly, isn't it better for the miners if Trump fails? Is that why some miners are up today? So for the first one, I mean, Barry, you've asked the $1 million question. What's the Fed going to do? And I'm going to go to an article because Jerome Powell spoke today, and then I'm going to show you what the market thinks about what he said. Let me just give me a minute to let me find that. So Jerome Powell makes no promise to ease policy. Fed to stay focused on inflation. So the Fed chair spoke Friday with markets in full-blown panic, they are in full-blown panic following the Trump tariff announcements. But here's what he said. U.S. Federal Reserve Chairman Jerome Powell promises to keep his eye on the inflation ball. So the inflation ball says, if he's looking at inflation more than he's looking at jobs, that means he's not thinking about lowering rates anytime soon, even as the president's tariff policies threw markets into panic. He said the central bank is well positioned to wait to consider adjusting its current policy. U.S. stocks are plunging for the second consecutive day, but good news, Bitcoin is beginning to show signs of decoupling. So that's what we had talked about. There are several articles today about the decoupling that Bitcoin did. This is a very rare. For the markets to be down 8 to 10% this weekend, for Bitcoin to be up, this is not how this has worked in the past. And I think it's a part of a much larger pattern playing out on Bitcoin that is we have been going through the bottoming out process. And I think this week more so than any showed a lot of strength. And maybe we've found and we're creating a solid bottom to take the next leg up. So that doesn't mean it's straight up starting tomorrow and today was the bottom. And, we'll look at the one day. I think we got down as low as 76,000 at one point over the last month. So sure, we could revisit some of those numbers, but the fact that we didn't, the fact that we stayed between $81,000 and $84,000 in back-to-back days where the stock market absolutely melted down, that is not. If we had done a poll, you would have said that Bitcoin was going to tank, retest those lows, or take out those lows, but it didn't do any of that. Instead, it hit a higher low. So that was very encouraging. But back to Barry's question, what's the Fed going to do? I mean, they are saying they don't care. They're going to wait. That's what they're saying. Now, here, does the market believe them? The market jumped from yesterday until today. The market jumped from a 22% chance of a rate hike in the May meeting to a 29% chance of a rate hike in the May meeting. So essentially, the market is still pricing in there will not, or sorry, not a rate hike, lowering rates. So essentially, the market still does not believe Jerome Powell is going to lower rates in May. I think we would have to see a lot of bad data come in between now and then for him to lower rates in May. However, if you go to June, I think there's a market difference here. And this jumped. So the chances of not raising rates yesterday in the June not lowering rates, not adjusting rates at all in the May or June meeting, as of yesterday, that was a 21% chance. As of today, that dropped to a 1.9% chance, which means 98% of people think we're now either going to get 1 or 2 rate cuts in the next 2 meetings. So for as much as Jerome Powell is going to use the talking points to say, everything's okay, I got my eye on inflation more than I have my eyes on jobs, the market doesn't totally believe that, because you can see they're pricing in 1 to 2 rate cuts over the next 2 months. And certainly 1 by the July meeting, there's a 98% chance built in of a rate cut. And there'll be a lot of data that comes out between now and then. And this trade situation is going to have a lot of information that comes out between now and then that changes things. So let's end this poll and get a new poll up today. Type. So I'm asking, what did you do with Bitcoin mining stocks this week? Just gonna take me a second to get this up. Keep it simple. What did you do, if anything, with Bitcoin mining stocks this week? Did you buy the dip? Did you hold or sold? What did people do? And now I want to show you guys what the Bitcoin miners did this week. So we took a look at Bitcoin, which destroyed the indexes. However, not so lucky for the Bitcoin miners. We did have one Bitcoin miner that was up this week. CleanSpark was up 2% on the week. So, you know, it's not exactly anything to throw a party over, but it was nice to see that in the green. Bitcoin was 0. It was up 0.3% on the week. So technically that was in the green. But then you had some, you know, these did okay on a week where the stock market got taken out. Remember, the indexes were down 8, 9, 10%. So really, all of these companies, Iron Hut, Riot, Bit Digital, Core Scientific, TeraWolf, to be down 2 or 3 or 4% in a week where the indexes were down 8 or 9 or 10% is extremely good performance, even with Bitcoin kind of breaking even on the week. Then things get a little tough. Hive and Bitfarms 7%, 8%, Marathon down 9%. Marathon was down for a reason, like I said, and we'll look at this. Oh, we'll go look at it right now. This is Marathon. They put this out earlier this week. $2 billion, might have been actually when the market closed on Friday, $2 billion at the market offering. If we go to Marathon, they're now a $3.9 billion company. By the way, they've been over $8 billion. So, you know, their market, forget their stock is destroyed. Their market cap's destroyed as well. It's down more than 50%. So at a $3.9 billion company, putting out a $2 billion at the market offering is pretty wild. You don't see that a lot in the market, but I think with they have very clear intentions with it. And the question is going to be, are the Bitcoin miners that buy Bitcoin and hodl Bitcoin, are they going to get rewarded this year? They did not in 2024. 2024, it was any Bitcoin miner that even just put out, they didn't have to do anything, get a contract. If they talked about allocating resources to high performance computing / AI and, switching it up, not leaving Bitcoin mining, but, adding that as a revenue stream, those outperformed the Bitcoin miners that stayed more true, pure Bitcoin miners and the Bitcoin miners that hodled. I believe that in 2025, the Bitcoin miners that hodl are going to have the stronger performance this year. And I think it's going to be by a lot. However, and I think that clearly Marathon thinks that, or they wouldn't be doing a $2 billion at the market offering as a $3.9 billion company. And Marathon, by the way, if we go to their press release, they now hold 47,531 Bitcoin. So that is the second most of any company, publicly traded company in the world. Second, of course, to what is now referred to as Strategy, formerly MicroStrategy. So they hold 47,000 Bitcoin, but Riot, if I can find the number here. Riot's coming up on 20,000 Bitcoin on their balance sheet. So you've got Hut is around 10,000. And then let's see, CleanSpark is coming up on 12,000 Bitcoin on their balance sheet. So, you've got 4 companies with significant hodl balances. To me, I think those 4 are going to, finish among the top 4 from a stock performance standpoint in 2025. That's my personal opinion. That's kind of how I'm investing. But there are other companies that are doing the exact opposite of this. They're allocating their resources or shifting their resources away from Bitcoin mining and towards high performance computing. So we're going to see, these companies will not perform the same this year because the strategies are diverging from each other. They were never all identical, but, there's even bigger differences between these companies, more so than ever. And that's just going to continue on a going forward basis. So, more than one strategy can win. So it's not like one's going to win and everyone else is going to lose. And Old Jock saying, no pressure on Jerome Powell. It's all on Donald Trump now. I would say it's on both of them because, believe me, the stock market is throwing a temper tantrum, and that is for the benefit of both of those gentlemen. And, now there's nothing anybody can really do to Jerome Powell. He cannot be fired. His term ends next year. But just as, he's in a position where pressure is going to mount massively. And I think he should be lowering rates. That's going to be the next poll. I don't know why he's not already lowering rates. I don't know what he's doing. This higher for longer, this we can wait stuff, I don't think makes any sense at all. So most of the other countries in the world are lowering rates and have much lower rates than the United States. So I don't know what he's waiting for. This is what he's got in his head. This is what he thinks is going to work. And you can see even as recently as today, he stuck to those talking points. I think we're going to get 3 rate cuts in 2025. Could be 4. So they're going to be later. And the only thing that does is punish the stock market in the middle. And there's no doubt, as for Donald Trump, I mean, this stuff has to play out. 30, 60, 90 days from now, if this is not moving in the right direction, people are going to be more than restless. You can see the first 2 days, the market tanked. If we're down 30%, 35%, 40%, that's going to start to be a historic pullback in the market. Those things have happened before, of course, but those are full-blown, stock market crash, recession, etc. scenarios, and we do not want to get into that. Oh, and JJT Peters is saying, I think the tariff is not calculated on the cost, but on the value when it arrives at the port. So, that would be that would actually make a lot more sense. So I have to look into it, but I think you are right, JJT. Christian saying, I think this just gets walked back and he has egg on his face in a couple of months. Otherwise, Trump is pretty much giving U.S. So Christian thinks he's going to walk it back. Old Jock is saying UK markets are all down 4 and 5%. So yeah, it's happening all over. So, and MicroStrategy to 20 is verifying that is correct. It's their value when they hit the port, not the cost it took to make them. So let's see. What did people do with their Bitcoin mining stocks this week? 41% bought the dip, 49% held, and only 10% sold. So we're still, whether you're bullish or not, everybody still seems to be hanging in there. That's basically 90% are at least holding these stocks, and about half of that are buying the dip. So we still have optimism. All hope is not lost. I'm going to ask this now. While I'm at it, we're at 75 likes. Thank you very much, everybody that smashed the like button. If you have not, or if you just got here, if you could please smash the like button. It does help the live stream out in a big way. It helps it spread to other people so they can come and join the fun here. Not that the last 2 days were fun, but we do have a lot to go through. We're in the middle of a lot of information here. So put a new poll up right now. Question is, do you think the Fed should lower rates in the next meeting, which is May 7th? So that's almost 1 month from today. Do they need to start lowering rates? Understanding they've just been taking meeting after meeting off from lowering rates. And this is the same thing they did in 2024. I will tell you guys, I don't think they're going to, but I think they should. I think they already should have done one rate cut. You're saying his job is not to bail out Trump. I assume he's talking about Jerome Powell. No, but his job is to bail out. His job, well, the Fed has a dual mandate. Keep unemployment in check and to keep a healthy level of, to keep inflation in check, right? So inflation is one of their mandates, and to keep a healthy level of employment in the United States. So it's a dual mandate. It's a balancing act between those two things. And to say right now you're more worried about inflation long term than jobs, I think is missing the picture. I really do. And I know it's gotten twisted around because of this tariff stuff. Now all of a sudden everybody's concerned short term. This is going to reignite inflation. So I understand that that's what people are thinking. And
do you think it is, Tom?
I don't. No, I don't think that it's going to have a significant impact. And I think inflation's been, over a 75-year period, the United States has averaged about 3.5% inflation. So we've been under that for a year now. So it's time to start. And yet our interest rates are at 4.5%. So, which is, for the last 30 years is very high. So it's time to you know, and here's the other thing. There's, these policies have to match up. We went and borrowed an extra $20 billion in the last, sorry, $20 trillion in the last 10 years with rates at basically zero. So, to double or triple the national debt and then put interest rates really high and leave them high, to me, that is the biggest toll that is being taken on this country. And that's going to cost more jobs than anything else. And once people start to lose their jobs, things get recessionary, they get deflationary. You can see oil is tanking. No pun intended.
Tom, do you think this will slow down the amount of money that we borrow?
The
United States borrows, yeah.
Well,
I mean, do you think this slows? Do you think because of these tariffs, the economy shrinks, and we don't need as much money?
I think they got to go through. I think Congress has to pass a bill. They need to pass a budget, and here's the thing: if they don't, the government's going to shut down. So, you can guarantee GDP is going to go down if the government shuts down. You can guarantee unemployment's going to go up if the government gets shut down. Now, with the government getting shut down, they still leave essential services. So, that doesn't mean every single person that works for the federal government goes home. But that's what's on the table. So I think both sides are going to be highly motivated to pass a budget that makes more sense. There's no sense in the amount of money that we spend. We jumped the budget. We increased it by about 50% in a couple of year period during COVID, if I'm allowed to say that word. And then we just said, okay, that's the new baseline. Now that's how much we need to spend every year from now on. And we need to add some, for annual inflation to it every year. So that never made any sense to me. It doesn't make any sense. We need to cut back spending. We need to get rid of our deficit, which is different than the debt. So most of you probably know the deficit is on an annual basis. Are you spending more than you're making? And if you are, then your debt is increasing. Well, we have to stop. That has to stop. Like not tomorrow or 5 years from now. We have been kicking this can down the road. I remember when we got to $1 billion, $1 trillion, and then 1 trillion turned into 2 trillion, and then 2 turned into 4, and 4 turned into 8, 8 turned into 16, and now we're at $37 trillion. I mean, 10 years ago, nobody would have believed that number. They said, the United States will be gone before we get to that. But here we are, and we got to do something about it. So that's my strong opinion. I mean, they got to balance the budget. They got to get government spending under control. And in doing so, there's going to be a lot of jobs that are lost. So, that's why I would have my eye, despite, this tariff thing is in the short term very distracting and makes you feel like inflation is coming. But if they can't balance a budget, or even if they do, they're going to cut back on jobs in the public sector, which has been holding up our jobs reports for a long, long time. Healthcare and government are the only place we create any jobs.
Well, and should you even count that as a job? I mean, doesn't that just increase inflation?
Those count in the job numbers. The biggest employer in the United States by 100 miles is the federal government.
Right, but I mean, isn't that just when you're borrowing money to pay somebody, isn't that just increasing inflation?
If you're right, that's right.
Right, that's
you're either borrowing it or you're printing it. An old jock is saying the United States is living beyond its means, and there's no doubt about that. And it's one of the reasons, and I know, right now I can tell you, I'm going to tell you guys, I watched a BBC clip today on the tariffs and what the United States did and what China did. And the economist that was in the UK was warning several countries by name, do not start a trade war with the United States. That's our disaster scenario. We need to find common ground and get to the end of this, because for most of these countries, it's just a losing proposition. And however, that's not the point that I'm trying to make. If looking in the comments section, 100% of the comments were anti-United States and pro-China. 100% of them. So, now it's a couple hours later. I don't know if somebody's jumped in and said something, but that gives me a little insight as to the sentiment on how the rest of the world feels about this. Go China. Good for you, China. At least somebody can do something about this. So this is being received with panic all over the world. And it's going to take weeks. We just saw back-to-back days of treachery in the stock market. So there's no reason to believe that all of a sudden that's all going to be all better Monday morning. There's a lot more talking, negotiating, compromising, finding common ground that has to go on for everybody to get to a healthier place. Andrew's saying they have to refinance trillions in debt very soon. They want to do it at 2%, not 4%. And that's right. I mean, just from a math standpoint, you can't lower your budget if your interest payment is double, triple, quadruple, or 5 times what it was. So, that's a big problem. And, the Fed kind of made a promise by setting a new norm with interest rates, at or around, with the Fed rate at or around 0 for 25 years. You've sent a signal to the market that that's how you're behaving. So to raise them drastically and keep them up there for years is not what anybody counted on, and it's certainly not what the federal government counted on. Now, shame on the government for borrowing all that money anyway. I understand that. So I don't think anybody's defending running up the debt to $37 trillion. That's a nightmare. Thank you, J.G. Lee. Appreciate it. Harrison saying, so miners are done? So I don't think the miners are done. But let's take a look. So we looked at what the miners did this week. So again, to me, you've got 1, 2, 3, 4, 5, 6. These 7 miners beat almost every single stock in the stock market this week. Because this week was the indexes were down 8 to 10%. There were stocks down 15, 20, 25, 30, 40% this week. Even some of the ultra mega cap stocks were down 15% this week. So I thought this was a really nice week. And I know it's red, other than CleanSpark, we're red across the board here. But I do think unlike the stock market, I think this is the bottom for Bitcoin. And I think this is the bottom for the Bitcoin miners. And again, when I say it's the bottom, that doesn't mean that today was the exact absolute lowest day. We are well into a bottoming out process. And at some point sooner than later, this is going to turn around, in my opinion. It's fool's gold trying to pick, if you're waiting for the day the bottom hits, good luck, right? And buy a lottery ticket too while you're at it. I have been dollar cost averaging into this. And, the only company that I have, we talked about on this channel reassessing things after the first 90 days of the year, which has now happened. I'm going to interrupt myself. We're at 88 likes. If you could please smash the like button, it does help us out a lot. Thank you. And thank you to the 88 who did hit the like button, thumbs up button on whatever device you may be on. So I just interrupted myself, George. Oh, George. And there's no George. Chaos. So, in other words, I think we're in a bottoming out process. And again, I'm not going to point to the day. I'm not going to say today was the bottom. It could have been. But I'm going to show you some charts in a few minutes where I think, and we've been looking at these charts and talking about the fact that I feel like we're bottoming out. And the biggest evidence of all to me, I'm going to go to the 1-day chart. So these two green candles, the market was down 5% each one of those days. And understand, where, we're Bitcoin, a lot of us trade Bitcoin or cryptocurrencies or Bitcoin miners. So 5% moves seem like a joke. That's a regular day. For an index to move 5%, that happens, once a year. Sometimes you can go several years without that happening. Sometimes it can happen a couple of times a year, but that is an outlying event. It's a disaster. We had 2 days in a row where that happened. But what did Bitcoin do? Green, green. That is a significant evidence towards decoupling, because if Bitcoin was still in a bear market, if the bears were winning, if the pressure was to the downside, this would have been the easiest moment ever. It should have been the easiest moment to take out this low that we hit on March 11th, right? We got down to $76,555 just under a month ago. So if ever there was a time to tank it and hit a lower low, these last 2 days were the best opportunity the market's ever going to see to do that to Bitcoin. But it didn't do that. In fact, Bitcoin went up each one of those days. So to me, that is really strong evidence that I think you had kind of, this candle wick to the downside and this one here. I think that's going to end up representing the bottom. Now, you'll see a purple line at just under 74,000. So I will not be, I can't sit here and go, wow, I will be stunned if we pull down to, bounce off of this. It's a line on the chart. So I certainly can't say I'm going to be stunned if that happens. But evidence is pointing to the contrary. I think we're looking at, at least staying, part of the bottoming process is staying sideways and then establishing a base, consolidating, making the next move up. I think you're really seeing that happen with Bitcoin over this last month period of time, and in particular over the last 2 days. Because again, if the bears were out there wanting to tank Bitcoin, if that was the prevailing mindset, this is when it would have happened. I mean, everything tanked except Bitcoin. So to me, this was extremely encouraging. And this goes, I'm going to go to the 1 week chart. This is a pattern that's been playing out for a long time now. Really, since we hit a new all-time high on December of 2024. Since then, you can see on the MACD, the histogram turned light green and went down. We had a bearish divergence at the beginning of February. So that was over 2 months ago. We're now 9 or 10 weeks into this bearish divergence. This is a bearish crossover on the MACD. And this you can see by setting this higher high with Bitcoin and this lower high on the 1 week RSI. I'm on the 1 week chart. So I've shown this every Friday. For those of you who have never been here, we've been looking at this for a long time. This is the activity. This is how this played out. So could it keep playing out this way? Could we keep going lower and lower, right? Well, 1 week is a long time frame. So these could play out over months. It's already been several months. So I think, though, you're now seeing this line on the weekly RSI held. So this was a line that, was set way back. This goes all the way back to January of 2023. So that's over 2 years ago. The weekly RSI has not gotten below that. It hit that 4 weeks ago, 5 weeks ago. So it touched that line. And that line held and we went up. And we have been consolidating ever since. The histogram is now moving in the right direction. So I do think we're poised for either some sideways activity, and which will ultimately end up in a move up. So I don't know. It could be 30 days away, 60 days away. So, I wanted to do a grand reassessment after 90 days. I truly thought we would have played this out by now. But, a lot has happened since then. A lot of other factors have happened, most particularly, this this tariff stuff has turned the entire market on its head. And I want to go to the fear and greed index, and not the crypto fear and greed index. The CNN has a stock market fear and greed index, the entire market. And this shocked me. Today, the fear and greed index, CNN's fear and greed index for the market was 4. That's on a scale from 1 to 100. Deep into extreme fear. There was one other time in the history of this thing it got below this, and it's the day we closed the world's economy. We said 2 weeks to flatten the curve and literally shut the economy down. This got down to 2. That's the only 420 is a disaster on this. 4, I couldn't believe my eyes. 1 year ago, we were neutral at 53. A month ago, we were in extreme fear at 11. That was very low. A week ago, we were in extreme fear at 21. Yesterday, we were at 7, and 7 turned into 4. And I don't know what it's going to turn into today, because today was every bit as bad as yesterday. So we could get another 4. We could get a 3. We could maybe match that too. I mean, this is historic level fear in the market. So if you're looking at fear and greed and fear, uncertainty, and doubt, this is at a historic level. And when's the best time to buy historically? In extreme fear. So as hard as it is to buy things right now, I do think when you look at this extreme fear number of 4, I mean, I can't even believe that a 4 could exist. Like, there's 7 different indicators. So all those added up, put together, they mustered 4 points out of, George, this is from 0 to 100.
Are you kidding me?
No. We're at a 4.
Wow. My question is, I think oil's still too high, by the way.
Well, and you just brought up a good point, and I'm bringing up, and I'm going to double down on your thing. Crypto Winter said, you can't wrap your head around the impact of crude oil dropping below 2021. Cheaper energy lowers inflation. And I will tell you, that is the number one driver of inflation by far. So there's been some other things that have been sticky that have lagged behind. Those are not tariff related, right? Rents, home ownership, that has been a part of inflation. That is subsiding regardless of what happens with the tariff situation. And now you've got oil. I'm going to go to the chart. I mean, oil is plummeting. Oil's down 10% this week. 60.
And I think it should go lower. I think it should go. It's going pre-50, by the way.
Oil at 62, right? And if it goes down to 50, I mean, we've been down to 45. Remember, we had one day 4 or 5 years ago where actually this number went negative. They were paying people to take oil.
Because I tried like heck to get oil. It wasn't really true.
Seeker, we're going to talk about that as well because you bring up a very good point. So we'll get to that. Thank you. Ethan saying, I agree, Tom. Oil price is a massive indicator. Right. I mean, this is the biggest driver. And the stuff that's been, you know, the most resistant to coming back down has been, you know, housing, rental prices. And I see that softening all over. And, you know, so I don't think, and regardless, that inflation is not going to have one thing to do with that one way or the other. So if anything, the inflation is going to hurt home building. It's going to hurt home builders. So I think there's every reason to believe things will move in the right direction. So I want to get to what Seeker was talking about, which is the VIX, because that is the volatility index. So I have that open here somewhere because, so this was what the VIX did today. So I've always talked about 35 being a line of panic. Even 30 is really high. You can see we got up to 28 back in December. That was a mini panic. We got there again in March. We're at 45 right now. I'm going to zoom out to put this in perspective. So we had a very weird day. August 5th, 2024, the market crashed, Bitcoin crashed, everything crashed. The VIX hit one of the highest. I think this was the second highest level the volatility index has ever hit in its history. So I'm going to zoom out and show you. Like, we don't get, you can go all the way back to December of 2021, which was the peak of the previous cycle. There's only 2 times we've been above 40 since then. That was on that weird day in August of 2024 and today. Prior to that, you have to go back to, and here's the mother of all anomalies. This was March of 2020, and we all know what happened in March of 2020. So this hit an unprecedented level. Those are the only 2 days higher than today. So we are at absolutely historically high volatility level. We are at an absolutely historic, we really can't get any lower on the fear and greed index. We're at almost 0. So volatility through the roof, fear through the roof. I mean, these are all the components. Like, if you were to make a list of what do you expect to see when the market bottoms out, this is the list. Now, I know there's an uncertainty out there on this tariffs that I think could linger, which is why George and I both agreed, as did the poll, that we'll probably have more in the market. We probably have some more pain ahead of us. But so that's for the market. And so for the Bitcoin miners, I don't know when they start to run, but I do think, like we looked at with the last 2 charts, there's very strong evidence to me that we've had some really solid performance out of Bitcoin, and that it is well through the bottoming out process. And again, I'm just never going to pick a day and say today's the bottom. It just, once every 15 years you will have one of those days. And you'll go, yep, that's it. But today's not one of those days. That's a black swan event. So back in 2008 or 2009, where the market was down 1,000 points, it got down to like, the Dow got down to like $6,700. By the way, the Dow was now over, at one point over $40,000. So, that day, like, I heard several people say, this is the bottom market. If you're waiting for things to get worse, it's not happening. This is the bottom. But, that's probably really the only time I remember that happening in my lifetime where it was that blatant. But all the signs are pointing towards we are in the neighborhood of the bottom. Right? You don't get to 45 on the volatility index once every couple of years. Right? I mean, you have to go back. In the last 5 years, that's happened twice. 2 other times. Right? And you got to go, this is all the way back to this is 10 years. We've gotten there 1, 2, 3, 4, 5 times in 10 years. That's how historically high we are on the volatility index. Old Jock is saying silver, copper, lumber, all down bigly too. So, yeah, silver got wrecked. Even gold was down. So gold, which ran up over $3,000, even that pulled back this week. And that is the ultimate safe haven. So nothing was safe this week. You know what was safe? Bitcoin. Barry C is saying there's a great video of Ronald Reagan explaining why tariffs are bad. Everyone should watch. Search for that one. I don't think anybody's a big fan of tariffs, and I don't think it's a long-term solution to anything. But I do think that it's a short-term negotiating tool. We've already seen this used successfully. So as a short-term negotiating tool, I think this can be highly effective if it's done right. And that's no guarantee, right? And that's why everybody's so afraid. But I do think that is the plan. I do not think ultra high tariffs and a tariff war with every country on earth is anybody's game plan right now. it's a risk that's on the table. It's a danger, and that's why the VIX is up at 45. But I don't think that's the game plan. I think this is going to, over time, start to unwind itself, and country by country, I think we are going to have a global reset on trade. There's going to be, it's going to change, but it's probably not going to look anything like what we just rolled out yesterday. But it's probably not going to look anything like the way it was the day before that either, because U.S. trade policy has been broken for 40 years, period. I just don't think there's anybody that can argue that. Of course, obviously, and anybody's the right to their opinion, but our trade policy, in my opinion, has been broken for 40 years. Something has to happen. Long-term tariffs forever is not the answer. Short-term tariffs as a negotiating tool, we're going to see if that works or if it doesn't work. That's what's happening. We just got to 100 likes. Thank you. I'd like to thank everybody very much for that. And if you haven't smashed the like button, please smash the like button. George, what are you thinking? You could tell it like it is.
I'm just not nervous anymore. I don't know why.
You're not nervous, but what do you think comes next?
I think it gets a little bit worse before it gets a little bit better. And I've been saying that a lot lately. And I said that the last stream. I didn't think we were at the bottom. And Bitcoin held up. I'm very happy with my crypto positions overall because I didn't get whacked. Like, I think I'm down another like 20 grand in my my trading accounts for, stock, but I haven't done anything. I did buy Bitfarms, and then I was able to get out of it and take a small loss, and I just took it because I still feel like Bitfarms is going into the 60 cents personally.
There could be more room to the downside.
If you think about it, they just raised, $200 or $300 million, right?
But not through equity, through debt.
I know, through debt, but the debt comes from the equity, and the equity is part of the company. I mean, right? I mean, any way you look at it, it puts more pressure on the price of the stock.
I think it does both. Over the long term, it puts pressure on them to perform because they got to pay that loan back. But in the short term, what's everybody's number one complaint by far for the last 2 years about the Bitcoin miners? It's not even close.
Oh, yeah, it's stock dilution, ATMs.
Right. So these at the market offering, shelf offering, stock dilutions, that has been the giant narrative. It's been everybody's explanation as to why the Bitcoin miners have tanked. So for Bitfarms to come out and say, we're going to go get debt instead, and more importantly, for them to be, I had no doubt they were looking for debt. The question was, were they going to get it? Were they going to find reasonable? I think it's 8%. That's reasonable terms. It's not great, but it's reasonable terms for the debt they need, for the growth that they want, so that they can keep doing what they're doing until the market eases up on this company. So they've taken off the table this risk that there's going to be massive dilution coming, right? They just showed everybody, no, we're not going to dilute. We're not going to raise our money and build this next phase out through stock dilution. We're going to do it through borrowings. So that should take huge pressure off of the stock. And the stock jumped a lot on that day. It was very green. And so now, obviously, the last couple of days have been bad for everybody. So Bitfarms.
I guess here's the other thing. I just, I'm not rich. You know what I mean? I'm happy. I'm very, in my mind, I'm the most successful person I know, right? People have a lot more money than me, and people have a lot less money than me. I'm not the skinny. I say this all the time. I'm not the skinniest. I'm not the fattest, not the strongest, not the weak. I'm just living my life. And I, for some reason, have felt that the stock market has been overblown for years. And not even to get into the whole understanding of how the stock market works. And I'm very good, I think, at like learning and understanding and trading. And I read some article that says, study as much as you want, and when you make your decision, do the exact opposite of what you decided to do, and you will win almost always on the stock market. And I wish I would have took that advice, because that would have been the best advice. That was the best advice somebody gave me.
In the short term, the market's not rational. It's
No.
not that it can be irrational. It is irrational in the short term, which is why I stick to long-term investing. Now, I understand there's people that have lots of swing trade strategies and day trade strategies that work for them. So congratulations. I'm not one of those people.
So I believe, and listen, this is what I believe. Maybe you don't believe this, but this is what I believe. I own a small business. I've owned a small business for the last 15 years. Okay, I came from corporate America, and in 15 years, I've worked for myself. And I have, in the last 4 years before this year, I have seen more small businesses go out of business ever before in the history of the United States. And it's doing it in ways that we're not going to get into the details of how it's all happening, but they're going out of business. And that has accelerated. So something needed to change. Something needed to be different this time around to get the middle class healthy again. Because the middle class is what makes America great, and it's what makes every country great.
Forget healthy, it's almost gone.
Right. So the rich and the poor, they have a very good thing in common. And you know what that is? And this is what I came up to the conclusion myself, is they both take from the government, the rich and the poor. The middle class are the ones that shoulder the burden for everything in the country. Think about it. Like, if a big company comes in, what do? Tax breaks, right? And, poor people, they need handouts. They get them from the government. I'm not going to get into debates. Do you deserve it? Don't deserve it? In that situation, I understand no one wants to get money from the government. You know what I mean? I hope. So the middle class has to become stronger in the United States for it to be healthy. And that doesn't bother me when, people that have had, a very good success in this stock market for 30 years, and then it goes back 20%. I'm not really too concerned about that. And I know I probably shouldn't say that, but I am worried about this middle class. These kids that are coming up nowadays, they do not have any opportunities. These kids that are 20 to 25 to 28, they have no opportunities. None, zero. Where are they going to go get a job?
Here's something that goes to your point. I just read an article a few days ago. The baby boomers just passed the millennials in home purchases for 2024. So, each generation gets its turn. The baby boomers' turn to lead in buying new homes was 30, 40 years ago. Then it went to Gen X, and then it got handed off to the millennials. So the millennials were the number one buyers of homes. Well, last year that stopped, and not by a little bit. The baby boomers blew by them. And that is because the baby boomers are at a stage in their life where at these unreasonably high interest rates, they don't need to borrow money. They're using their savings and paying cash. And we see it here. Our market down here is like 75% cash. I know that's unusual, but it's a higher end market. It doesn't real estate's local. But by and large, homeowners have to buy a new home, you need to borrow money. So the price of housing is up. The cost of financing is way up. And that's another reason they have got to get these rates down. So, when the 70-year-olds are buying more houses than the 35-year-olds that are supposed to be moving into their home, raising a family, creating the next generation, we've got a problem.
So with that being said, we are now in the most amazing time in the history of the United States and the world, okay? I have been programming so hardcore the last 3 weeks specifically, but the last 90 days. And I've been able to accomplish more in the last 3 weeks than I have in the last 15 years. And I know programming. I wouldn't consider myself a programmer, but what AI has done, like for an example, I have built a new TikTok app. I thought I'd be able to release it today, but since Trump extended TikTok, I'm going to wait another probably week before I do it. It's called yakyak.us. And I think in the United States, instead of having 150 million users using TikTok, I want 150 1 million users with other people's programs. And we can do that now. We can take away from these people that have gotten super wealthy off of the middle class, because now we have the opportunity to compete directly with them. And that's what people don't understand. We are in such an unbelievable age that anybody can go and start their own business and become successful. That I am creating an avenue off of the internet so people can they have another alternative to use on the internet instead of just, Google, which is just turned into big chat GPT results. And that's all that people use it for now. I don't know if anybody knows this or is even in the business of understanding how websites work or anything like that.
Yeah, if you do a search on Google now, the first thing you get is their AI result. That's a fundamental game changer.
I think it's Gemini is what it's called, by the way.
Yes.
But my whole point is there's so many opportunities that can be out there for the middle class again. Because what has made the middle class successful is that people took the opportunities that they laid in front of them, and they started a car wash, they started an insurance agency, they started, an internet company, they started, anything. And if you don't get that, if you do not get those opportunities for the middle class, then we're just going to be in a situation where we have rich and poor, and that's it. So that's what I think. So I don't know if these are good. I don't know if the tariffs are good. Only time will tell, but I just think that there's got to be some logic to it. It's a lot. Somebody with a lot bigger brain than me is doing it, not me. You know what I mean?
Well, change. The one thing that's certain is there will always be change. So change is coming. The uncertainty, though, is that an unprecedented between the VIX and the Fear and Greed Index. I mean, this is and 2 back-to-back days in a row of historic down days in the U.S. indexes. We're in a semi-uncharted territories here, and I do think we haven't bottomed yet, but I think on Bitcoin we are in the middle of the bottoming out process. I'm still very bullish on Bitcoin for 2025. So that's just my opinion, and you guys might think I'm crazy. We're going to do that last poll.
Kevin K brought up an interesting point, and that was American Bitcoin.
Yes, thank you for mentioning that. I'm going to talk about that next. There's 2 stories I didn't get to that we can do quickly, so we'll just do those, and the rest of them are not as important.
So I do construction also, and we have a agreement with a company called Main Street. I don't know if anybody knows who that is. It's a hedge fund. And they have gotten it down to where they tell you what they're going to pay. They say, okay, if you want to build this house, this is how much we're going to pay for drywall. This is how much we're going to pay for plumbing. This is boom, boom, boom. If you don't like those prices, don't worry. We'll get somebody else to do it. So if you're a builder in Georgia and they give you a subdivision, they tell you exactly what everything's going to be. And then you don't get to negotiate at all on the prices at all. You have a mistake, you have a problem, that's on you.
Done.
Let's go. I'll look at my crypto holdings and see how bad it is. I got out of all altcoins already, except XRP.
Read an article today that said XRP could pull back to $1.07, but I also read an article that is going to $10.
I think it's getting below $1.50.
So the new poll, for those of you who are interested, what do you think Bitcoin's new high is going to be I'm going to call it 2025 or 2026. It feels like things have gotten kicked down the road a little bit, and so this could be a little longer cycle. Ordinarily, we would get there somewhere in 2025, but it could be 2026. So what do we think? Do we think 110 or less, which means that you think the bull market's over because we already got to 109? 150,000, 200,000, 250,000 or more. And I want to get to Clive. Thank you very much for the super chat, Clive. Much appreciated. And thanks for being a member. Hut 8 Corp released its March 2025 operational update. Highlights significant achievements. Please review. So I will open that. They hadn't done that as of the last time I checked. So did they just do that, Clive? I'll open that right now and we'll just all take a quick look at it together because it's one of the two companies I want to talk about anyway. Thank you. Thank you for the super chat. And give me just a second and I'll have that
I'm hungry and I got to get this day over with. I'll see you guys.
All right, George. Thank you. Have a great weekend. Yeah, we're
Merry
wrapping it
Christmas,
up.
everyone.
I just want to finish these last couple of things, but thank you for joining us. George is gone. Okay, so here's Hut's operational report. April 4th, 2025. So I don't know. They literally must have just put this out. Hut 8 operations update for March 2025. 102% increase in deployed hash rate from an average of 4.6 exahash in February to 9.3 exahash as of the end of March. So that is a stunning number, I will tell you right off the bat. Thanks, Clive, for letting me know that they put this out because I have a chart where I've updated everything and this wasn't on it. And I did not see that coming. They have an option to buy a lot of machines, and I know some of those machines are definitely coming. Some of them they can still make up their mind on, but I did not know that they were going to jump from 4.6 to 9.3. This is the first significant increase in exahash Hut has had in about 3.5 years, and they pretty much just doubled in 1 month. 102% increase. So this is their biggest press release in 4 years, in my opinion, just from that. And that's not the only thing they did. But let's see how many actually Bitcoin. So Bitcoin produced in February, they were at 46. So they've gone to 88 Bitcoin. And so, you know, that's significant. Almost a double. And they doubled their hash rate and they almost doubled their Bitcoin mined. So this puts them back in the game. We debated for a long time. Is Hut going to go, you know, just high performance computing? Because they really hadn't added to their exahash in many years. But then they started to show some purchase orders where some of them were options. Some of them they were going to buy. But then the other big news came out. So this one just got me. So you got me, Clive, on that one. 9.3 is a shocker for me. So that's a fantastic month for them. 31% improvement in fleet efficiency from an average of 29 joules per terahash in February to 20.1 joules. So you can see they were at 29 joules per terahash. These were all their old machines from back in the day. They really haven't been buying machines for years. So they jumped from 29, which is not competitive, to 20.1 joules per terahash, which is right in the pocket. That's right there with most of their competitors. There are a few that are ahead of that, most notably Iron is at about 15, I think, and Cleanspark's at like 16.5 or 17. So those two are kind of out in the lead, but 20 is very healthy. That puts them in line with their peers. But more than that is this. Launch of American Bitcoin in partnership with Eric Trump. I'm not sure why they keep saying Eric Trump. It's actually Eric and Don Jr. that own that company. But either way, and they changed the name. They had an existing company. They changed the name of that company to American Bitcoin. American Bitcoin is now going to be 20% owned by the Trump's children and 80% owned by Hut. And it is going to be a straight up Bitcoin mining. Now, they have taken all their Bitcoin mining equipment and contributed it to this new subsidiary. So technically, the parent company, Hut 8, isn't mining Bitcoin anymore, but they're an 80% owner in American Bitcoin subsidiary, which not only is mining Bitcoin, but let me go to the other press release because they talk about American Mining wants to have a path to 50 plus exahash at an average fleet efficiency of less than 15 joules per terahash. So that puts them back not only in the conversation, but now all of a sudden they're the size of, there's kind of a big four right now, and I'll go to that chart. If we go, okay. So you can see there's four companies. This was last month, and I'll show you this month's, and it's the same results. Marathon, CleanSpark, Riot, and Iron are just mining more than double anybody else. And if you look at their exahash, 53, 40, 33, 31, that was February. I have some March numbers that I'm going to look at in a second. So you can see there's four companies that are running away from the field. But if, what was it, American Bitcoin got plans to get to 50 plus exahash, they're going to be back in this conversation with these Bitcoin miners. So I think there's really only room for 5 or 6, maybe 7 publicly traded big Bitcoin mining companies with the amount of growth that these have gone through. So that's where I think we're going to be at. I think a lot of these other companies are going to shift focus. They may continue to mine Bitcoin, but it'll be one of many revenue streams. A lot of them, I think, are going to switch or are attempting to switch. Like, for instance, TeraWulf has announced 2/3 of their infrastructure is dedicated and committed to high-performance computing. So TeraWulf has plans to get to 13 exahash for Bitcoin mining. Hive has plans to get to 25 exahash. And those are plans. We'll see if they get there. BitDeer has plans to get to 40 exahash. That would put them in the conversation. But this takes Hut from dead. Hut has been in dead last for a year. They're at 4.6 exahash, last place. In Bitcoin mined, 46 Bitcoin, last place, 11th place. We're only following 11. Now, the reason you don't see TeraWulf on here anymore and Bit Digital is they are no longer reporting this information. So we can't track them. They're not telling us the information anymore. But so now Hut with 88, you're going to see now all of a sudden they're in direct competition with Canaan and Hive, right? So that was a quick jump. And I expect next month, if they are truly at 9.3 exahash, they're going to pass both of these companies in April, would be my guess, but we'll see what happens. So that's big, big news for Hut. And then let me just go look at, just to update the companies that have put this out. So we'll go, Hut's now 8.8. Or sorry, 9.3. 8.8. They're 88. 88 exahash. So prior to that, let me go through this and then I'll update this number. Everybody has had 1, 2, 3, 4, 5 have announced, and now 6 with Hut. All 5 of these had a good month. 10.7 is the extra number of days. So that's kind of break even. But you can see everybody beat that. Marathon, 829, up 17%. CleanSpark, 706, up 13%. Riot, 533, up 13%. And look at this month. Riot, 533, Iron, 533. So they have been razor close. And this month, they mined the exact same amount of Bitcoin. Up 13%, up 16%. But like I've been saying, this is now 2 months where Bitfarms has stood out. Up 31%. Now, obviously, Hut's going to be up even more than that. So there's going to be 2 standouts this month. So if we do the math on this one, right, that's 91% increase for Hut. So that's off the charts. They are the big winner of the month this month. But Bitcoin or Bitfarms at 31%. Last month in February everybody, CleanSpark was at 0. Technically, they were negative. They mined 2 less Bitcoin, but call it 0. Everybody else was considerably in the red last month. Bitfarms was up in February. So they were the winner in February. They're going to finish in second place, it looks like, in March. 13, 14, 15, 16, 17% seems to be the norm. We'll see where the rest of these come at. But HUT just changed their game. They got back. No, they just got back in the game. They're a legit Bitcoin miner again. So that is big news. Thanks for pointing that out. And Pogo saying, sadly, the market doesn't care, which I know is true in the short term. That's just simply true. With all of these great numbers, these great monthly operational reports, the market just doesn't care. They're just selling the Bitcoin miners off, and now they're just selling everything off. So, like I said, the Bitcoin miners actually did better than most of the market. They were red, but they actually beat all of the indexes this week by a lot. So it's still hardly consolation when they were finished down on the week with such great numbers and great results. So maybe HUT will get a pop on Monday. I don't know why they would announce this Friday after the market closes. This is such a great result. So we'll take a look. Where do you think Bitcoin's new high is going to be? So 21% think the bull market's over. 110,000 or less. 150,000, 38%. 200,000, 17%. And 250,000, 22%. So 78% still think we're going to get over 150,000. With 22% think we're still going to the stratosphere, 250K or more. So overall, I think we're still, despite the severe panic in the super short term, it seems like on Bitcoin, we're still a pretty optimistic group here. So I'm in that same boat. I think we're going to finish somewhere between, my number's 175,000. So I think we're going to finish somewhere between 150 and 200,000 by the end of this cycle. And, you know, I don't think we're going to have a gigantic crypto winter after that, but we're a long way from any of that. And we're knee deep in the middle of this right now. Until further notice, it's only about tariffs for pretty much every stock in the market. So let's see how things unfold over the weekend. Let's see how things unfold next week for the members. I will see you guys Tuesday after the market closes. I want to thank everybody for joining us on the stream. If you haven't, please smash the like button. And remember, we're here every Friday after the market closes. So thanks so much for joining. I know this was 2 very bad days in a row, but we finished with a pretty optimistic poll. So I hope everybody has a great weekend.